Good day, everyone. Welcome to this presentation on Naspers and Prosus. I'll be covering the latest announcements made by the group. So last week, Monday, the 27th of June, the group released their results for FY22. The results showed strong e-commerce top-line growth, widening of the e-commerce trading loss, as well as a lower contribution from Tencent. And then on the same day, they had two separate SENS announcements. The first one related to the sale of JD.com shares. And they received JD.com shares as a special dividend from Tencent, which they have sold, and they're going to use the proceeds to strengthen the balance sheet. And then the second one, and this is the most important one on the day, was the announcement of an open-ended share repurchase program, where they will be selling part of their stake in Tencent to fund repurchases of Prosus and Naspers. And in addition to that, they've removed the voluntary lockup or restriction on the sale of Tencent shares. In our report, we've updated our intrinsic values to reflect this move by management. We think the holding company, or the discount that we apply to the intrinsic value calculation, should be lower, and that's driven an intrinsic value increase. Our recommendation does remain on as a hold. So I'll quickly go through some of the results highlights, but I think the main focus of this call should be on the transaction. On this slide, I've got some of the highlights. We've got overall e-commerce revenue up by 58% to $9.8 billion. Food delivery, which is now the largest segment in the e-commerce portfolio, basically doubled. Classifieds was up 86% to nearly $3 billion. Payments and fintech not up as much, up 38%. Retail was flat, and EdTech, which is a new segment in the portfolio, grew 270%, but it's still making quite a minor contribution to the overall group. Tencent increased 14% to $25 billion. And then I've highlighted in red the divisions which are unprofitable. That's basically the whole e-commerce portfolio. So Tencent remains the backbone of Prosus. Overall, the e-commerce trading loss widened by 159% to $1.1 billion. Also, in the results, there was a gain of $12.3 billion. That was from a 2% stake sale of Tencent, and that drove the EPS up 243% for Naspers, 173% for Prosus. And then headline earnings and core headline earnings decreased, primarily because of a lower contribution from Tencent, as well as increased investments and increased finance costs. So, as I'm sure you're aware, the shares of Naspers and Prosus had a significant rally last Monday. At one stage, Naspers was up nearly, was about 27%. It closed the day up 23%. Prosus was up 18%. And this is already starting to narrow the discount to NAV. So the proposal has worked somewhat. The discount for Naspers is now about 48%, and for Prosus it's about 43%. And then just to go over some of the details in the open-ended share repurchase program. So Prosus and Naspers will repurchase their own shares using the proceeds from selling Tencent. They've withdrawn their voluntary restriction on Tencent share sales. And just to add that this is in contradiction to what they announced previously, where when they sold their last 2% stake, they told the market that they would not be selling Tencent shares for an additional 3 years. So that kind of contradicts that agreement, but they've now removed that restriction. 100% of the proceeds are going to be used to fund the buybacks. Sales of Tencent and repurchases of Naspers and Prosus are to start immediately. It's probably going to take quite a while because there are limits on that. In August, they're going to seek approval at the AGM to increase repurchase authorization to 50% of the issued capital for Prosus. The repurchases are going to be split across the economic ownership of the free float. So that's about 60% for Prosus and 40% for Naspers. And that's just to benefit shareholders equally. The repurchases are going to continue for as long as the discount remains elevated. So this is kind of a gray area from management. We don't know for how long it's going to last, and we don't know what is the target discount that they will be happy with. Then also quite importantly, the sales of Tencent are going to be only 3 to 5% of the average daily volume. So remember, it's in the interest of Prosus to not move or not create downward pressure on Tencent. So these sales are going to be done with at the least impact to market as possible. The program is going to increase exposure to Tencent on a per share basis without spending cash. And then very importantly, management is still very bullish on Tencent. And then just to close off, we view the announcement as positive. It's a kind of first logical or first step that management has taken in quite a while to reduce the discount. So we think that's good. The impact of this is that we've now reduced our discount applied to the sum of the parts calculation. So on Prosus, it's now 40% from 50%, and on Naspers it's 50% from 62%. And there is a breakdown of that in the report. And as a result of that, we've increased our intrinsic values. So on Prosus, we've got 1,130. On Naspers, we've got 2,435. But we still have got a hold recommendation on both of them. So that brings me to the end of this presentation. If you would like to place a trade, you can speak to your financial advisor or contact our dealing desk. And then you can find the report on MyBase.